And then in terms of the outline of what we're trying to achieve in this room today, as I mentioned earlier, we'll be talking on the introduction. We'll be having an introduction to financial modeling. I would explain the uses of financial models. I would explain the process of building financial models, the concept you need to understand, the components of financial models, and the core drivers that drive the running of a financial model. And then I'll also talk about why you should learn financial modeling. So why is this class important? Why is financial modeling important? How will it be valuable to you, to your career? How will it be valuable to your business? What would learning financial modeling skill add to your career, add to your business operations? How will it make you more effective? All that will be explained in this room. And then finally, I would show an example of a live financial model. I will explain what the financial model was used for, and then we would have a question and answer section where you can ask any question you have. So as the outline suggested, we'll be jumping into an introduction to financial modeling first, right? And then jumping into introduction to financial modeling. So the first question and the most important question that'll be on everyone's mind here is, what is even financial modeling? What is it? What is financial modeling? What is it about? Right. And then to answer this question, I think we need to start small, right? And start from modeling in itself, right? What is a model? Right. So a model is a numerical or mathematical representation of a real life situation. So models is used in all aspects of life. So you have mathematical models, you have building models, you have machine models, and you have financial models, right? And then just before I jump into financial model, to give an example, for example, companies like Tesla that make cars would build a model where they build the materials of the car, the engine of the car, and all sorts of things like that in a model. And then based on the model they built containing the materials of the car, they can simulate the model to see what will happen. Let's say if the car drives for 50 meters, for 50 kilometers, what will happen to the car? How many kilometers in how many kilometers would the fuel finish? In how many kilometers would the tires stop, the tires not work properly, and all those kind of things are what a model for a car would tell you, right? For a financial model, which we'll be looking at in this class, it relates to business and finance, right? So it helps you put in the real life situation of your business or of a finance project you're considering into a mathematical model to help you analyze or to help you see the trend in performance of your business or of the project you are trying to achieve or run. And then based on the assumptions on some basic drivers, which would then help you, based on the assumptions on things you expect to happen in the future, the model, which contains several moving parts, as we further discuss in this class, would then show you some key values on how your business will perform in the future. So for example, let's say someone in this room runs a food business, right? And then you see that there's inflation in town and prices of the food items you're using to cook your food and transport the raw materials from market to your shop is increasing day by day. So you then need to know how much to increase the price of food to maintain the current profit margin you are earning, right? So to do that, rather than cracking your head and doing all sorts of things, if you have a financial model, that can help you easily solve that problem, right? And then for other sophisticated businesses too, financial models help the finance manager, the CFO, and even the CEOs to make the right decisions based on seeing how their business is expected to perform based on macroeconomic indicators like inflation, interest rate on loans, and then even based on expected increase in cost of raw materials, cost of shipping. So you can predict that, okay, if cost of shipping increases by 10%, cost of goods increased by 30%, and then maybe based on that, you need to increase salary by 10%. So how much do you need, by how many percent do you need to increase your revenue, your cost of goods, the amount you sell your products to be able to make profits? A financial model helps you answer that question. And for people considering building projects like maybe building a skyscraper, building a railway project, building a road, a financial model also helps those kind of companies to understand how much it would take them to design, evaluate, and complete the project. And this can then help them to know the right amount of profit margin to into the project before even bidding to the government or whoever on the amount they would like to do the project. And then for businesses also, financial models help them in allocating their resources effectively. So for example, a company knows that it has 100 million in working capital. So you know you have 100 million in working capital and you need to allocate those resources efficiently unless you run out of cash, right? And then if you just start doing it based on how you feel, you realize that your business just winds up, and then you have no cash to run operation, and your business is dead, right? So to do this, a financial model helps you understand how much you need to allocate for salaries, how much you need to allocate for administrative expenses, for your business to run efficiently, and all sorts of other allocations that might be needed, right? And then for investment bankers, right, or people looking to enter the investment banking space, and even for so for that, financial models are also important because financial models are the bedrock. A financial model is bedrock for carrying out evaluation exercise. So your company or your client is trying to acquire another small company, or they're trying to merge with a small company, right? So you need a financial model to help you carry out the evaluation to understand what is this business actually, what is the actual value of this business, and then having a full understanding of the value of the business your client is trying to buy will then help you be able to easily advise your clients on how much they should pay the potential owner of the business they want to buy for them to get a good price, right? But not having the model can make the transaction go at a far higher price, right? And then this is just some of the reasons that helps you show or helps make clear the value or importance of financial models, right? And then just finally to just mention quickly. So for example, your business has been performing within the last 3 years. So they've been COVID, we've had about 2 recessions within the past 3 years, right? And then you're trying to predict what the performance of your business will be. So you're thinking, okay, there will probably be another wave of COVID, right? There will probably be another wave of COVID, right? That's one. And two, you're thinking they might probably increase the cost of petrol. So if they increase the cost of petrol, it means the cost of your goods will be higher because the cost of transporting them will be higher and that might affect the cost of your goods, right? And then thinking about it, so that might affect the purchasing power of customers because customers will have less amount of money to even want to buy your products because they're not buying more fuel they're buying the same amount of fuel with more money, right? So looking at all those considerations now help you optimize your business to now make sure that, okay, do you need to raise more capital and then reduce the price of your product for a while before you increase it so that you can gain market share? Those technical questions are what a financial model would explain or would let you understand fully, right?